Hey guys, how you guys doing? Again, this is Joe Coronado, and I've been thinking about putting a video together to help us out and help our business. We're getting a lot of people sharing more information on annuities, and if you guys understand what our brokerage does here, our firm basically. We do life insurance and annuities, and we're starting to see more of a lot of our advisors talking to families about annuities, and they're just touching on it, and then the follow-up. Well, what exactly is an annuity, and what is it exactly does an annuity do? And then we kind of panic a little bit, and we don't follow up. So, what I'm putting together here is a video basically to give us a layman's terms to simply explain in a best format how this works for families and business owners, and give us a better explanation to the client that we got to understand that in every business there's verbiage that goes with it. You know, the medical field has their own verbiage, and there's no difference from the insurance field having a particular verbiage. And then we come here into annuities, which is retirement protection products that help families. You want to make sure we have the correct verbiage. That we're talking to families and business owners, or in general people who are just looking to put money aside. But the best thing that I can share with you guys, I guess and again, guys, this is pretty much research that I've done on my own, and self-study as far as learning product, taking a look at the different products in the market. And if you guys know some of the life products and annuity products that we sell, then you guys are pretty familiar with what we do. But really simple, I wanted to share with you guys on the annuity side what it does and how to best explain this product to the families and the business owners that we sit with. You know, I had the opportunity to sit with a client yesterday, and I guess the best breakdown I could give a client was because immediately everybody wants to qualify for something. So normally we want to leave with a sell on a life insurance that we do, and as an advisor, we get out, we walk out of there, and they want us to leave behind. We leave brochures, we leave information on the product that they purchase, right? That's what we do. But more importantly, we want to also leave them with a little bit of collateral information on a future follow-up. And so I explained to the client that, you know, Mr. and Mrs. Garcia, really thank you so much for the time that you gave me, and of course the opportunity to protect your family in this lasting legacy that we're leaving for your family. And more importantly, I just wanted to let you know that we also help families and business owners alike that are possibly looking to protect some of their retirement or money they put aside to retire on. So what I wanted to do is, I don't know why this thing keeps sliding around. Sorry about that. So what I wanted to do is kind of break down what I talked to the client about and how I got to the client to talk to me about doing an annuity. Guys, the people that I've spoken with and the reading that I've done is, like I said, you leave collateral information and just leave, a little bit of, just dabble a little bit, come back, set up a proper appointment, and sit down with them on that product. So the client actually didn't let me leave, just like planned. The plan was to just give her a little bit of information and possibly come back at a later date and say, hey, Mr. and Mrs. Garcia, this is what we do, and then kind of roll out the products that we talk about and how it helps her, do an illustration, so on and so forth. Well, she says, can you explain to me a little bit about what it does, And bear in mind, I had another appointment, but you're talking about, this was a very large life insurance she covered her family with. So of course, respectfully, I sat back and I started breaking down, to my knowledge, the best way I could explain to her on an annuity and how it would work for her. And she's like, because I'm buying a life insurance, a whole life product with you, and on the whole life product, I'm getting a rate of a 4.3%, right? And I said, okay, I like that, she says, and that's the reason I decided to go with this product rather than a term, so on and so forth. So what can I get if I go into an annuity on a fixed rate annuity? What is that, Joe? What does that do for me, right? And it just happened that she knew a little bit because I guess some other agency had talked to her, or another brokerage firm, whatever. They had kind of dropped a little bit of a dime in her mind, and then here I come and start talking about it again. And she says, so what does that mean, Joe, that if I can get a rate, and what does suitability mean? Oh, okay. And I said, well, the best way I can explain to you is this way. I said, suitability basically is the same thing that you would have to see as us making sure that you're fit to qualify for a product. So on the life insurance side, you're buying a life insurance and they have to make sure that you qualify depending on your MIB and making sure all your medical criteria clears in your background in order for you to purchase. It's no different than you going for a bank and you're going to apply for a loan. You have to qualify through your credit in order for you to qualify. Financial suitability basically means the same thing, and a medical suitability is something that they do. One, you can medically qualify for the product. Financial suitability, basically the company is trying to establish, and you can correct me if you'd like. This is again is information that I've read and I put together as far as for our organization. But basically, to see financially, you're going to get this product, and let's just say you buy something that is allotted for 7 years or 10 years. They want to make sure you're not going to start digging into this product within the next 2-3 months as soon as you put money in there. So it does give you access to money. That's always the question. Can I have access to my money? Yes, you do have access to your money. It's a percentage of your money, clearly not all of your money. But on a financial suitability, they want to make sure that you make the income. One, two is if you have rental properties, if you have any other side businesses that, of course, provide you income, where you're not going to deplete this program that you're starting, or this annuity that you're starting. We would hate for you to start this and within the next 2-3 months you're asking for a loan and start depleting it, and I can see that. I can understand that, because even in life insurance, we sell a whole life, and people are asking, can I get a loan out in a year? And realistically, guys, it doesn't build that quick, and give it a little bit of time. So what I explained to her was the suitability was the medical making sure you qualify medically, and then more importantly, making sure you qualify financial suitability, being that you have the income, that you're not going to deplete this. And people that are really looking to put money aside, they really understand. They want to leave it in there, basically the 10 years, or reinvest it again and leave it in there for another 10 years, so on and so forth. But the point is to build cash value over time. And they can use it in their retirement. They can turn on what we call turning on the faucet, and they get a drip of income constantly coming. That's kind of the hope and the dream of a lot of people. So then the client says, what rate do I qualify for? That was her next question. And again, we go back to your medical suitability, your financial suitability, and I'm going to give you the best example that I gave her. I said, look, this product, no matter what you do, works for you. And if you're a conservative buyer, this would be a product that would definitely be right up your alley. And the reason I say that is I explained to the client that we're starting a bank, right? And Crown Financial Bank. This here is just an example. And we go and get, I don't know, 12,000 clients, 15,000 clients. They all drop a little bit of money in the bucket. Banks turn around and they go and buy what's called bank-owned life insurance, and let's just say they get a rate of 4%. The bank turns around and gives their members a 0.5, or I really haven't even seen anything above a 1% in our area here. So let's just say they give you a 1%. The bank still makes 3% on it, whatever, and they go turn around. The bank looks great because they took 12,000 or 15,000 clients' money. Their financial suitability is really strong because now they're walking in with $8 million, or $10 million. Financial suitability is really strong. They may get even a higher rate. Who knows? That's what the BOLI stands, BOLI, bank-owned life insurance, and they purchase this insurance. It's no different from them and you. The only difference is that you don't have 12,000 clients or 15,000 clients, and being able to walk in with that financial strength of, of $8 to $10 million or whatever it may be. So they're going to just go off of your financial suitability being on you, as a single person, and seeing where you qualify. More importantly, if you do qualify, usually what I've seen, and it all varies with different products, but what I've been able to see was on a fixed annuity, you're looking at a 6%. Roughly 5.5, 6, maybe even a 9. But again, it depends in that range financial suitability and medical suitability, guys. And just giving her that information, the client set up an appointment. More importantly, wanted to see an illustration. So what turned into a, I'll come back later and talk to you about it. The client was, well, I kind of want to know more about it. So I had to literally sit there and do another illustration. And it allowed me to set up from a presentation on a life insurance. And then I just ended up going and explaining to her. And I told her that I would bring her actually a copy, because I was on my iPad, and that I would come back and bring her copies of the illustration tomorrow and break all that down for her. And she's, well, more than interested. The client said, let's just go ahead and do it, Joe. She understood it. She really liked the part of cutting out the bank. And, you know, before, guys, the standard was, and we're starting to see here in our area, in our area, we're talking about it more and more. Our advisors are becoming really, really educated about it, and they're starting to talk about this more and more. They walk out of a life insurance client, they tell them they can help them with this, just saying this, you know, and leaving the collateral information in their mind, you know, dropping a dime in their mind, basically leaving it in their head that, hey, you know, we can also help you with this. The clients want to know more. Now, what happens is you start getting, you know, guys that work for Edward Jones and different companies or other competitors in our area start bad mouthing you that, oh, you don't know about this product, blah, blah, blah. And the way I saw it was, with anything, guys, if there's competition, just hold yourself, you know, hold your head high and be confident. Educate yourself on the product. Read, learn about the product. They ain't done nothing no different than you. They read, they learn the product. That's the same thing. That's the only way we're going to get any knowledge in this. More importantly, is us reading and learning about it. There's always training available. You guys know we have training available here at our office. So we always have training available to keep us sharp. And more importantly, we always try to have an annuity training where we have people come in, give us better training and educate us. That's really something that I see a lot of people lack in this area. And I know this because we have tons of advisors that come through here, agents, whatever you want to call them, and their biggest, their Achilles heel is no training, and they're coming in from different organizations, and you can tell there's no training just by the way they speak. They don't speak the language. Some of them don't really understand even how to explain a whole life. So we know that there's no training. I've got guys that explain a term as they're talking about liability insurance on a car. So we notice that these guys really need good training. Now, I know there's examples and analogies you can use, but when you're speaking with an educated client, you want to carry yourself in a very confident way, and more importantly, be able to speak the verbiage with this client. And not going to say you're going to learn everything, you're going to know everything, but you want to know enough that is able to help this client. We want to know that we can help the client. Now, are banks doing anything different than us as far as an annuities and life insurance? They're not doing anything different, guys. They don't do anything different than us. They sell insurance, and the life insurance they sell comes through a broker just like us. We used to be a broker for banks here in our area, so it's no different. People just go to their lending institution because they like the name, you know, whatever the bank may be, Acme Bank or whatever. It's a big name. At the end of the day, guys, most people that are really looking to fund money for themselves, they don't want to pay fees, and they don't want to have to deal with administrative fees and different things like that. They'll go through you. And that's just you getting that message across to let them understand that if you buy with me, there's no fees or no administration fees. More importantly, there's no fees to monitor your accounts. On a fixed annuity, it's basically taken care of for you. And if there is a fee, it's very, very minimal, and is usually an internal fee through the company that's already taken, that normally is built in the cost for you guys. Again, guys, I just want to kind of give you guys a layman's term explanation that can help us translate this information. And I know that we're not all in the Rio Grande Valley, that we can catch up with each other. So I wanted to put this video together and make sure that it's enough information that can help you set up this appointment and getting your clients to, you know what, I want to do this with you rather than, and I want to cut out the bank, you know, and I want to go directly through you. Because so many times do we see people that they go through their bank and they get charged a fee. Let's just say the fee is 3%. And the bad part about you paying a fee, no matter whether they have a good year or a bad year, you still get charged a fee. More importantly, the client still loses, even if it was a bad year, you know, and you didn't make any money, the bank still charges you fees. And my client was telling me that she had money in a savings and she made like $475 for the whole year. And for having a savings account, it was $8 per month, so whatever that is at the end of the year, plus a fee that she paid. She said I ended up paying like $308 in fees, so I made $475 for the year in my savings, and more importantly, lost $308 in fees, guys. So, people understand what you're talking about when you're telling them and explain to them, because, and if they don't, they will understand that if they have multiple accounts, they pay fees. So we're just trying to eliminate that for them. Whether it's a good year, bad year, doesn't matter. They still pay fees with us. We don't have to worry about that, guys. And that's another additional help to you and your business, guys. I hope this is helpful to you guys. Again, Joe Coronado with Crown Financial, the Crown Life and Crown Coaching Academy. We'll talk to you guys then. Hopefully this works out for you. Be blessed, guys.